Hello, everyone, and good morning. Hope you had a good weekend. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Mondays. As usual, we're going to do a little review of the market action from last week. Then we're going to go over the market happenings of this week, prepare you for the week ahead, and then I'm going to share a few technical trade setups in stocks with top Zacks ranks. Last week, we took a look at this broader downtrending sort of consolidation in the S&P 500. And, this market, it just kind of won't stop going up. And after we put in these lows 2 weeks ago, there's really, it's just breaking through all levels of resistance. And any bout of selling is met by intense buying. And you can see just on Friday. So on Thursday, it's, I'll say last week, I thought maybe we trade sideways, maybe we roll over a little bit before making that breakout. And you can see on Thursday, the market started to roll over. And I thought, maybe one more down day, then we'll figure out the consolidation. But the market just reversed aggressively and cleared this level of resistance. And, I think we're really setting up for a powerful Santa Claus end-of-year rally. And, if you look back on any of the past editions of Momentum Mondays, you'll see a lot of the stocks that I've shared have broken out and moved a lot higher from the breakout levels. And it's actually limited some of the breakout stocks that I can find because so many have already broken out and made moves higher. So, I've had to look a little bit harder to find ones that are setting up in the way that we like to look for them, but there are a few, and we'll get to that in a minute. But yeah, broad market is just incredibly strong. You can see the NASDAQ too has really cleared this level of resistance, and it's just a few percent away from year-to-date highs. I think that 16,000 level in the NASDAQ 100 is definitely going to be coming in hot. One broader development, so interest rates have eased off a little bit. We saw them break down below 4.8, which was really encouraging. I think if they can stay down for the rest of the year, that would be great for stock participants. Maybe we see a bounce back to 4.8 in a retest and then a move lower. But seeing the interest rates ease a little bit was great. If we do see another rally, it could cause a short-term correction. But to be honest, any sell-off in equities, so long as it isn't horrible, I think would be great for traders to find trading setups again, just because the market is a little bit extended here, but it's sort of just, it keeps grinding higher. One interesting thing I wanted to note was oil completed a major sell-off last week, and I think it's probably found a short-term low, and I'm going to share an oil stock that I think is a good buy here. I had sort of been avoiding oil for the last few weeks. I hadn't made any oil recommendations because I was a little bit worried about this sell-off happening. The market, oil wasn't really being bought into these Middle Eastern conflicts, which I thought was extremely surprising. And the oil market continued to roll over. I'll touch the rest of that when we get to the oil stock I'm looking at. And that's really it to cover from last week's action. Just a very strong market. And, it seems that equities have been so strong it's gotten away from a lot of participants. So let's take a quick look at the calendar. Not too busy of a week. We got some federal budget information this afternoon. There's a lot of Fed speeches, which could always throw a curveball at the market. Last week there was a speech from Jerome Powell midweek that shook the market a little bit until he was interrupted by protesters. But so a lot of Fed speeches this week. Tuesday, the data gets interesting. We get CPI and core CPI Tuesday morning, which of course is extremely important to the Federal Reserve's interest rate policy. We see forecasts are for 0.3% increase, but a month over month, and for the core CPI. And headline CPI, the forecasts are for 0.1%. Year over year, they're looking at 3.7. When you can see last month, the year over year in CPI was 3.7, so down to 3.3 is the expectations. Although core, which excludes energy and food, which are more volatile components, is expected to remain the same, 4.1%. So, of course, it'll be interesting if we can see the numbers come in below 4.1%. Would be extremely encouraging, and it would sort of follow the data that we're starting to see, that we started last week to see, the last few weeks to see initial jobless claims pick up, which shows a bit of a slowing in the economy, which is a good thing. It's certainly not a crashing economy. Disinflation or inflation is starting to slow, and those are good developments so far. Then on Wednesday we get PPI, Producer Price Index, and Core PPI, further data regarding inflation. A lot of Fed speeches. Thursday, we get another initial jobs claims. We see it continue to pick up, 222,000. Again, these are not high numbers, really, but with such a tight labor market, it's encouraging to start to see these numbers pick up a little bit, because we want to see the economy ease just enough or slow down just enough so that the Fed can take their foot off the brake on interest rates and maybe start to lean more dovish, which they have been. And I think this is a big part of it, that they're starting to see this labor market loosen up. Last week it was 217,000. This week they're expecting 222,000. So these are really good numbers, to be honest. As long as it's below, it's below 300,000, above 200,000. Labor market's easing, but we're certainly not crashing in the economy. A lot of Fed speeches. We got home builder confidence index. And then Friday, housing starts and building permits. I think these will be some interesting numbers too. Obviously, the housing market is very closely related to interest rates, which are sky high right now. Mortgage rates are, around 7%. So I think housing starts have slowed considerably. So it'll be really interesting to see where this goes. That's it for calendar. There's a good amount of earnings this week as well, but we're going to slow considerably. We're getting later into earnings season. Last week was the big week. Monday, not too much. We got Tyson Foods and some international names. Tuesday, Home Depot. We got a lot of good retail this week. Home Depot, Sea Limited is an interesting technology company abroad, based in Singapore. It's interesting Chinese native, Tencent Music, Vip Shop. But Wednesday is when the retail starts to pick up. Wednesday, we got Tencent, Cisco, then we got TJX companies, Target, Copart, a name we've looked at. And then you got JD, which is Chinese e-commerce company. Palo Alto Networks, which is a cybersecurity company. Then Thursday, Walmart, another big retail name. Alibaba, international retail name, plus more. Ross Stores, good retail. And then Friday, it lightens up again. Just a lot of international names. It's a lighter week. Inflation data is the big catalyst, and then initial jobless claims. But so let's get into the technical trade setups. First one I want to take a look at is DraftKings. This is one of America's leading online gambling websites, sports gambling related mostly. It's got upward trending earnings revisions. It just had fantastic earnings, reported really strong earnings, third quarter earnings. It's the leader. It's the biggest gambling website in the country, and it continues to expand across states. Gaming is in one of the top 36% of the industry rank. And it's a company that runs at a loss, here and there, but it's in this burgeoning industry of gambling, which is extremely profitable and fast growing. And it's got a nice technical setup. You can see the market gapped higher on this earnings day. It looks like earnings was Tuesday, November 2nd. And then the next day we got a huge move higher, 16% move higher. Stock traded to all-time highs, or no, not all-time highs, yearly highs. And it's building out this nice little bull flag here. I quite like these smaller setups that just take a few days to build out. And so long as it holds above 34.75, and once it breaks, you want it to hold above 34.75 first. And if it breaks out above 36, I think it's good to go. Going to make another new high for this year. And this is also kind of an interesting read through on the consumer. I don't think many people are going to be spending money gambling if they aren't first covering their basic needs. And that's what the last quarter showed, is that they beat expectations. So people are using their app more than they expected, which is encouraging for the consumer. So watch that $36 level, stick an alert right there. And the next one is another stock we've looked at. Back to the energy names. Petróleo Brasileiro, also known as Petrobras, is a nationalized Brazilian integrated oil company. It's the biggest oil company in Latin America. And it's a huge company. They employ tens of thousands of people. It's a very important company and well positioned in the oil industry. It's got a very reasonable valuation, just below 4 times forward earnings. And just notice this, look at industry rank, top 1%. It's the number one industry in the Zacks industry rank, number one out of 250 integrated oil and gas companies abroad. So that's pretty cool. And like I said, I like seeing this washout in the price of oil. And when oil sells off like this, it makes me think, people are expecting an economic slowdown. And while we are seeing the economy slow down, it's certainly not, it's not smashing into a wall and breaking immediately. It's an economy that's flowing very slowly and at a very gradual pace, and things still look pretty good. So I think at least in the year end, we see some kind of reversion move in oil, maybe back into the mid 80s. And that should be good for PBR as well, for Petrobras, which got this nice bull flag here. And if anyone that read the Bull and Bear report over the weekend, they'll know I covered PBR and went a little deeper into why I think it's good. Something I noted about the oil market was that the strategic petroleum reserves of the United States is at 30-year lows. And this sell-off in oil sort of gives the Biden administration an opportunity to refill at a reasonable price. And I think that could be one catalyst that puts a bid under the price of oil, which should translate to higher oil stocks as well. We have a nice bull flag right here. If we see it break out above 1570 this week, I think, we're good to go for another new high this year. And just want to see it hold above the 1480 level. You don't want to see it trade below this lower bound. And of course, the price of oil will be an important influencer on what this stock does. And the last one we'll look at is Datadog. This is a mid-cap technology company, data management, fast grower. You can see earnings per share are forecast to grow 3 to 5 over the next 3 to 5 years, expected to grow 22% annually. It's got a uber premium valuation, 76 times earnings, but that's what you pay. You pay up for these fast-growing software companies, sitting in the top quarter of industries in the Zacks industry rank. And it also just had a good quarterly earnings report. You can see it gapped higher. This was just a stock I was watching, a nice little wedge that it blasted higher from on a strong earnings report. And it is building out a nice little flag here. And it gives you a really tight little risk-reward setup here. You see it above 103.75 this week. I think it's going to make a move against this yearly high around 120, which is a hefty move. And you don't want to see it below 98.70. I think these setups are pretty cool when something gaps up on earnings. And it hasn't traded below where it went since those earnings. So clearly buyers are interested in the stock after seeing such a good quarter. That's all for today, folks. Hope you found it interesting and valuable. If you like the content, please like the video and subscribe to Zacks' channel. And if you want more information from Zacks, sign up on the link below to zacks.com/promo.